Hi, my name is Mark Lewis, here to talk to you about my top 5 tips for price action swing trading. But before we get started, we need to understand what we mean by swing trading. Here you can see we have um, a daily chart of euro dollar, and there is quite clearly a bullish bias towards euro dollar for this time period. This time period goes all the way back to June last year, so there is about 1 year's worth of price action here, and people have been steadily buying euro dollar in that period overall. However, you will notice that the pace at which people buy eurodollar is much faster than the pace at which the trend goes, and so there comes a point at which uh, people want to take profit on their positions, and it pushes eurodollar back down within the trend to hold within. So we have these quite sharp with the trend moves followed by these corrections to hold it within the trend, so that overall the price doesn't accelerate too quickly, so that the trend is nice and steady. And this is something that happens a lot in trading in financial markets. Um, and we're going to go over some tips and techniques, some price action tips and techniques to enhance your ability to swing trade. So I'm going to kick off with my first one, and it's a really obvious one, but it can't be spelled out enough really. It's We need to clearly identify support and resistance. Now, support and resistance is where uh, people typically want to change their positions because they believe that that's what everybody else is going to do as well, and that's what essentially moves the price action. And so there are numerous methods for doing this, which we'll briefly cover just now. We will look at Fibonacci levels, Fibonacci extension levels, daily and weekly highs and lows, key trend lines and channels, round numbers. And we're going to look at some of these just now. So I've got the very same chart of eurodollar, and I've drawn up all of the relevant aspects for identifying where we think trends or price may begin to change direction. Um, and so we start off with a higher high. We have this low here, and it's rallied up, and it's broken the previous highs, um, and then it's retraced back down here. And so at the moment, people aren't that confident that this is going to be a bullish trend, but you know, they've seen the higher high, they've seen it break a new high, and they're now suspicious that this is now going to be the beginning of a new trend. And so we've had this retracement back here, and uh, if you have a look, this is a 50% Fibonacci retracement, which means that at half of this move, this means that this move is twice the size of this move, and so we've gone 50% back, and this is where everyone has entered for this trend continuation. And there are a number of other methods here which we'll go into in much more detail at a later date. But we've got a Fibonacci extension here, which is taken from here, from these points here, and we use that to measure further into the trend. And this is a very, very effective method of measuring further into trend, to identify places where you may be suspicious that there may be some people offloading some of their positions and beginning to take profit on their successful positions. And this is what you want to be aware of, because you don't what you don't want is, you don't want to sort of buy, at a great price here, let it go all the way up, and then let it come all the way back down again, and then think about taking profit. This isn't what you want to be doing at all. You want to be taking profit. You want to be maximizing the profit from your trades. And we're going to be teaching you a lot of techniques over the course to show you how to improve your ability to read a chart and to know where to do this. And if I label up these points here, you can see that the tops and the bottoms here, there are a lot of price action clues to give you a head start that something might be happening here, and that things might start to be changing direction in the short and medium term within the bullish trend. And so, obviously we've had rejections here from these resistances. We've had a trend line rejection here. Same thing here. We've had a breakout, and then we've had a rejection from support, and we've had rejections from resistance here again. This is an AB equals CD move here, and so this move here is a 100% fib extension. These are all things that we're going over quite quickly now, but we're going to be going over these in much greater detail at a later date. So this is more of an introduction and to teach you, uh, in brief, the top five methods that I would recommend for for swing trading. Um, okay, on to number two. Be aware of overbought and oversold conditions. Now, there are numerous ways of doing this. You don't necessarily need to use an indicator to do this. You can do this just by sort of being familiar with chart patterns and using price action to be able to do this. However, it's considerably more easy uh, to do this when you use some momentum indicators such as the relative strength index, because it gives you a clue of where on the chart, as soon as you get to something that is overbought, you're not going to want to be buying there. You're going to want to be taking profit from your existing long positions at the overbought conditions. And if you have a short position, you're going to want to be taking profit from the at the oversold conditions. So if we have a look at the RSI indicator, you can see that this is a pretty effective method for it. It's not particularly used directly as a signal, although I'm sure some people do. But our preference is to use tools such as this in combination, and to use techniques in combination to enhance your probability of success. It's all about improving your probability of getting a winning trade rather than losing money, which is something that you want to avoid. And these are techniques that we can teach you for avoiding these. And so if you look at these levels here, you'll notice that they correlate very well with tops and bottoms. And okay, we may get some situations uh, where we overshoot levels. We have this overbought level here, which is the 70 level on RSI, and we have the oversold level, which is the 30 level on RSI. This is RSI 14. This is a 14 period RSI on a daily chart, and it's a very very commonly used a very very commonly used method of measuring overbought versus oversold. Now, this obviously doesn't take into account any sort of fundamental issues. If we're here and we have an incredibly important piece of news, say the ECB they want to instigate quantitative easing immediately, this isn't going to mean anything. The price is going to go down anyway, and we're going to overshoot. And we're going to overshoot in the similar ways that we've done this. But the important factor is that once we get to these levels, or once we approach these levels, it helps us to be on the lookout for price action, and then we can get confirmation from the price action. And so if we have a look at this one here, this is a particularly good one. We've reached oversold here, and we've got a load of pin bars here. Now, we're going to be going into pin bars in a little bit more depth just now, but this is again a price action that I would be particularly looking for during an oversold condition. I'd be looking for bullish pin bars around support and resistance, and these are again ways of increasing the probability that you're going to have a winning trade, that you're picking tops. You're not so much picking the tops and the bottoms, but you're picking appropriate places, and you're waiting for something to tell you that there has been a change of trend, and then you're entering the trend in order to capture all of this lovely upside for this bullish trend. And also to make sure that you're not placing enormous long positions just as the swing is about to change direction within this trend. So this entire page here, the trend is bullish. However, there are retracements within this, so you don't want to be buying around about here particularly. This is not a great place to be buying. You want to be buying at the lows, and you want to be taking profit at the highs, as we've already mentioned. So I'm going to move on to the next one. Learn to read candlesticks. Now, I've already slightly brushed on pin bars, and for me, the most important pin bar is the most important candlestick to learn is the pin bar. There are others as well. There are engulfing candles. There are inside bars, and there are a whole number of different ways of reading candlesticks. But for this purposes, we're going to just focus on what is, I think, the most important, which is the pin bar. So here we are back to our naked euro-dollar chart, and here we are with the pin bars illustrated on them. And if you look at where the pin bars are, you can see that it's a very effective method of determining a short to medium term trend. And essentially what it is, um, what price action aims to do, which is essentially what we started saying at the beginning, is identifying prices at which a lot of people or a lot of positions, a lot of large positions, are changed. Now, what the effect that changing position has is that you tend to move the market in, in a particular direction. If you're long and you close your positions, then you're going to be moving the market down if you have incredibly large positions, or if there's a lot of people doing it all at the same time. Um, and so pin bars are a graphical representation of this having already happened. And so, for instance, if we look at this one here, this pin bar here, we've met support here, and uh, there's been a lot of people that have either bought here or they've closed their short positions here. And as a result, there's been this strong push down, which has been rejected, so that the price here has been rejected. And this is a very good indication that there's about to be a resumption of the uptrend that we've observed previously up until that point. And sure enough, that is a very good point to be jumping in and entering long on these positions. And also, this is the opposite end of the stick. We're still in a bullish trend, but we've gotten to a point at which everybody wants to take profit on their longs. And this has again pushed price back down away from where the support and the resistance is. And this is a very, very good indication that perhaps we're slightly more overbought than we should be, and we can expect a retracement within a trend, or potentially a retracement within the trend and then a break of trend. And so these are very important clues for taking profit from your positions. Okay, 3. The trend is your friend. When trading, and particularly when swing trading, it's very, very important to be aware of trend and be aware of when a trend is broken, or what are the extremes of the trend. And there are a number of methods for doing this. One of my preferred methods is to draw channels, as I've already shown, and I'm going to cover that in a slightly more depth now. But there are some tips that I can give you for